These slides showing the business activities related to financial statement, that is the balance sheet. What balance sheet? What is a balance sheet? Balance sheet is a financial statement which shows the financial positions of a company at a particular point, which gives an idea about the current financial position of the firm. It's like a snapshot of what company owns and what it owes to various stakeholders. It is termed as a balance sheet since it represents an equality. Sources of funds any business has equal the uses of these funds for buying resources for the businesses. So this balance sheet we can relate with the investment activity and the financing activities. As we saw earlier, the business activity has been classified into three: operating, financing, investment activities. The two activities are called, that is financing activity and investment activities. These two activities can be related to the balance sheet of a company. So balance sheet has two sides: liability side and the asset side. Liability side can be otherwise called as sources of fund, whereas the asset side can be called as a application of funds. The liability side is furtherly classified into two: equity and liabilities. In equity, share capital, reserves and surplus, and the liability shows current liabilities and non-current liabilities, that is short-term and long-term liabilities. So through the liability side, that is the sources of funds tells what are all the sources through which the companies raise funds for their business. Or the company borrowing funds through issue of shares or bonds, or the company is borrowing funds from the banks or any other NBFCs, non-banking financial institutions, for their long-term purpose, for acquisition of business or for expanding the existing business or for buying a plant and machineries. So whatever may be the purpose, the company raising funds for the business, there are so many sources are there through which the company can raise funds. Debt and equity are the main sources. So sources of funds through which the company raise funds is it will be shown on the liability side of the business. Of course, the company can use retained earnings of the company. Reserves and surplus, the company can use the reserves and surplus for expanding their business for long-term purposes. So liability side shows the sources of funds, and where the asset side, it is called as application of funds. So liability side tells sources through which the company raises funds, and asset side, the company uses those funds for buying of assets. So this is the application of funds. The company has to efficiently utilize the funds which raised through various sources, that will be properly utilized, and those funds must be properly allocated through various activities by purchasing of assets. Asset use efficiency is very, very important for a company. These slides shows the sources of funds and application of those funds. In simple terms, businesses making money through source of funds. and it applied those funds for buying of raw material, purchasing of machineries, factories. So application of funds for long term and immediate purposes. Thank you.